Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 10, 2022. Hope you're all doing well. So in today's segment, we'll take a look at stocks to avoid. These stocks have got heavy insider as well as institutional selling. So in this tough market, it's good to avoid such names. We got one company here, Olo. It's helping restaurants with the takeout. Stock has been coming down pretty hard, mainly because there is a heavy insider as well as institutional selling. We'll look at many such names and go from there. So with that, in today's segment, we'll quickly do a market update, look at stocks to avoid. These stocks have got heavy insider selling, institutional selling, both insider as well as institutional selling. We'll look at these three lists here, and then we'll finally conclude and go from there. All right, from a market update perspective, look, right now we're in the extreme fear zone. When we go into extreme fear zone, that's when the money will come from sidelines into the market and will start slowly going higher. That's how it's positioned here. At this time, I see folks putting some money into the market slowly, buying these dips and positioning themselves for a nice bounce back. All right, so with that, let's jump in here. Look, from a market update perspective, we got here, everybody's waiting for the tomorrow morning, the key inflation reading. So if the key inflation reading goes too high, that's when market will get sold off here. But if it is a little bit moderate, market can have a good relief rally. We'll see how it goes. Look, in the futures market, we are pointing upward slightly in all the major indices. But in today's regular market, look, all the major indices came, at least Dow Jones came down here. Nasdaq had a nice rally because Nasdaq has been beaten down big time here. Nasdaq rallied slightly here, not too much. And S&P 500 also had a small rally here. Futures are looking up so far, but this can change any time here. In the futures market, stocks, these indices have been very volatile, so we cannot depend on this reading right here. This can change any time. All right, so with that, let's go into the ETF. So from a top exchange traded fund perspective, look, last 6 months have been brutal for most of these stock indices, with few exceptions, of course. So we got FSLY or energy. It's been doing pretty okay so far, as you can see here. And we got one or two more here. UUP, US dollar, that's been going higher, mainly with the interest rates going higher. US dollar goes higher, that's what's going on here. And look, oil is also doing pretty okay so far. That's mainly because of this Russian war with Ukraine. Some of these oil prices are going higher because of that, but of late it's cooling off slightly. Look, we got some areas we're getting slight indication here. Both SPY and QQQ, they're saying, you know what, we can't just go down, we want to stabilize. That's why in today both QQQ and SPY went higher slightly. And same story, technology also went higher, healthcare also went higher. You can see some uptick here in today's market here. That's indicating the exhaustion. These folks are thinking, hey, we can't go down any lower. That's why there's a small uptick in these names here. Look, even semiconductor, after beaten down so hard, it had a good rally today. So that's indicating the market is sold off too hard here. It's looking for a bounce back here. Even XLC here, think about Facebook and Pinterest and so on and so forth. XLC also went higher. That tells you these are exhausted. They can't go low anymore. At least that's what market is thinking at this time. And same story, IBB. Biotech has been battered down off late, as many of you know here, whether it's IBB or XBI, all beaten down. So that's why it's kind of going higher slowly, because it's overdone at these levels here. All right, now let's jump in here and look at the market. From a market perspective, look, it's been down for a long time, as you can see here. right from April it's been down. So when it comes down like this here, market will look for an opportunity to rally. That's what's going on here. There's a slight increase in the futures market. We cannot depend on it, but market will look for a reason to rally when this happens. We'll see how it goes. And look, bonds are selling, slightly increasing, as you can see here. This can change as Fed starts tapering down, but interest rates are going higher, as you can see here. All right, so looks like gold is coming down. It could be a good time to buy some gold because gold is a good safe haven, a good hedging strategy here. All right, now let's jump in here and look at the stocks with the heavy insider selling. So when the insiders are selling their own stock, that tells you they don't have enough conviction, or there may be other reasons, but we don't like heavy insider selling. So with that, let's look at such names here. Try to avoid stocks with the heavy insider selling. Look, we got here a list of stocks here. Keep a watch on an insider selling here. All these stocks have got heavy insider selling. At the same time, the institutions are also not buying. They are also selling either moderately or heavily. That's why you got to be careful about these names here. We don't want to be caught in between the insiders and institutions who know so much about these companies. Look, top of the list we got LFG here, Rice Acquisition. And look, it's a $19 stock here. Look, insiders are selling heavily, institutions are selling heavily, and net margin is negative. Market does not like money losing companies at this time. Heavy short ratio, that's why this can create a short squeeze, but it's not a long-term good play here. And look, this company has got overall score just 11 and free cash flow negative. There is not too much to buy this stock here. That's why I think it's a good one to avoid. And we got many more names here. And also keep watch on at least 1 year, 5 year. If these companies have never made money, forget about it. Don't even worth putting your money there. And many of these companies, look, we got one here, IONQ. Look, this company has been losing money for investor right from the get-go here. One of the lowest overall score here. I say avoid such names like IONQ here. It's not worth your money. And we got a few more here. OLO right here. Look, both institutions and insiders selling heavily here. OLO, and it's got a high short ratio of 10% here. It's good to avoid such names here. And we got BBIG or Winco here. Same story. Both institutions, insiders selling, it's not worth your money. And we got one more here, Sentinel. This used to be one of the great cybersecurity software. That's how it was pitched in when it came IPO. Look, this has been a heavy insider selling, institutions selling, and short ratio is also high. Good to avoid such names here. We got many more names like this. Even this YMAB here. Look at this one here. Heavy insider selling, institutions selling, and stock has been going higher off late because of this short squeeze rally, but it will be short-lived most probably. So with that, let's look at few more names here. Look, the list continues here. Keep a watch here. Both insiders and institutions selling heavily. You got to be careful here. You got one name here, OSCR, Oscar Health. Look, both insiders and institutions selling heavily, and this stock has been not making money for investors for a long time. There is no reason to think things will change soon, so that's why it's good to avoid here. All right, so let's look at few more here. Look, now we are looking at heavy institutional selling. We already looked at insider. This will be institutional selling. So from an institutional selling perspective, these are all the big institutions. When these institutions start selling, you got to watch out because these are big institutions. They will be selling in high quantities. Look, here we got the list here. Keep a watch on institutions selling. So institutions are selling in huge percentages here, and in addition, insiders are not helping. They're also selling. So that's why you got to be careful with such names here. Top of the list we got OLO, which is again it's trying to help restaurants with their takeout. Look, it's been beaten down big time all the way from 1 day till 1 year, it has lost investors 82% of their value so far. It's not worth your money. And we got Kodak here. This has been trying to change its stripes for a long time here, but it's never made money for investors. Good to avoid such names here. And we got OSCR, same story here. It's been losing money for investors. And we got many more. You got to be very careful with these companies. Don't fall into the trap of, hey, it's very cheap, it's not worth your money. So with that, let's look at a few more stocks here and go from there. Look, now we are talking about both insiders as well as institutions selling, and they're doing it heavily. So you got to be careful with these names especially. So with that, let's jump in here. Look, we got the names here. We got Olo, Oscar, and so on and so forth. Keep a watch on insider and institutions selling. Look, all these names have got high insider selling as well as high institutional selling. So you got to be careful with such names here. And many of these companies have not made money for investors in a long time here. Look at the amount of percentage. It's down from 52-week high. It's many times. It's huge percentage. So you got to be careful with such names here. And many of these stocks have got overall score very low here. Look, we got one with a very low score here. That's a URG here. Score is I think it's not URG, the one before here. Coupang is a it's got a very low score, as you can see here, just 3. So you got to be careful with such names here. It could bounce back, but right now, both insiders and institutions selling. That should be red flag for us at this time here. And we got a few more names here. Look, we got Palantir. Palantir also same story. Both insiders and institutions are selling. You got to be a little bit careful here. And Palantir also has got high float. Look at the float here. They got 1.7 billion shares or dollar shares, $1.7 million worth shares outstanding. So it's a heavy float. So that's why it's difficult for the stock to go higher. Same story with Coupang here. It also has got a high float here. So that's why it's hard for these stocks to go up quickly. All right. So with that, let's quickly conclude here. From a conclusion perspective, avoid the stocks, especially when the market condition is tough. Avoid the stocks with the heavy insider and institutional selling. Some of the wealth destructors are, as you can see here, Olo, Oscar, Sentinel, IONQ, Kodak, and FSLY. These are some of these wealth destructors. We have seen many more of them. I just want to sum up with a few so you can take a note. And don't invest in such names, especially in short term, because they're going down big time because of this huge insider as well as institutional selling. So with that, thank you very much. Happy investing and trading. Please subscribe.